Good morning, everyone. This is Scott G with the Simple Trading Life. Welcome to our, I believe, Tuesday edition of our live stream. So glad you all could join us. Let me get comments brought up here so I can see if anybody asks a question. Yes, we already have several people in the room. Welcome, everyone. Hope everybody's having an awesome Tuesday. Plan on going over ES like normal, the S&P 500 E-minis, and then we will transition over and look at some forex and possibly some trade ideas on a couple of forex pairs or anything that we may see. And if anybody has any questions about anything or has some sort of name they would like me to take a look at, I can do that as well. So we'll go ahead and get started since we already have several people here in the room, and I'm sure we'll have more joining us shortly. Okay, so what we can see right here, this was our opening candle on ES, and you can see the whipsaw that we had. Pretty violent. So it whipped down, it whipped up, and then it ending up down red because this is our opening price level right here. So we ended up red after the whipsaw back and forth. Very difficult to trade that. Very difficult to trade that. That creates our opening range, right? For anybody who is an opening range breakout trader, let's just go ahead and I'm just eyeballing this here. I'm not trying to make it exact. But let's go ahead and put the opening range in. It's about like that. Okay, I might have it actually a little bit. Nope, that's right. That's about right. So if you're an opening range breakout trader, you're looking for either a strong break to the top side or the bottom side. As you can see, price right now is still right in the middle, right? So there's nothing to do unless you get a strong break to the upside or a strong break to the downside. I'm going to go ahead and set some alerts. So once we go off of ES and start looking at some other things, we'll get alerted if price moves one direction or the other. So give me just a second. I'll get these put in. And remember, everyone, alerts are your friend. Make sure you use alerts. They will make your life so much easier. You can go look at other things, and if something starts to occur, you'll be alerted, and you can go back and take a look at it. Yeah, we're getting a lot more people joining us already. A few minutes late today. I got back late from my walk. Walked about 3.4 miles this morning. Beautiful weather. It was gorgeous out. I was on the nature trail today, wasn't quite as hot. Yesterday, the park I was at yesterday, they have a half-mile loop, but you're totally exposed, and it was so hot and steamy. But today, I was at a different park walking on a nature trail, so most of the time you're like under the shade of the trees, so it was really comfortable. Okay, so we see price here has come back to both the 10, this is the 10 EMA, and opening price level. Okay, this opening candle, remember, if you guys are new here, I say this all the time, so kind of get this in your head. The opening candle of regular trading hours, that's your 9:30 Eastern Standard Time candle, is sort of its own animal. Sometimes whatever's going on, okay, let's just say like right now we've been in a downtrend since about 11 o'clock last night, okay? And then you get this big whipsaw. So if you look, it's unlike any other candle down through here. That's because everybody starts to come into play. Retail's coming into play. Big money is trying to manipulate retail. So there's a lot of stuff happening. Sometimes the reaction to news that may have come out at like say 8:30 or 8:55 or whatever, sometimes the main reaction won't happen until this initial 9:30 candle. So you have to kind of take this candle with a grain of salt. However, what you do want to notice is the range that it creates. So today it made a pretty big range. I think it's about, let's look, about $19. It's about a $19 range. Well, in fact, all I have to do is hover over the candle, let's look, 30, the low was 12. So 17 and a half, $17.50 range on this opening candle. So that means a lot could happen inside of this range, you know, chopping up and down, and there really wouldn't be a whole lot to do unless you're trying to take some small scalps, right? You might be trying to just catch, you know, we talked yesterday about micro scalps. I'm going to talk a little bit more about that today, and we're going to look at something once we flip over to the TrendSpider platform. And I'm going to show you how you can take really high probability trades, and if you follow your rules, your win percentage should be really high, your risk should be really small, and you should be able to at least clip off 2-to-1, 3-to-1 trades, you know, basically time after time after time. And when you do lose, it's going to be small. But we'll look at that here in just a minute. All right, so let's look at what happened since the market opened last night. So here was the first candle of the overnight session. What did we do? We came right back to the 10. Okay, now remember, I've switched only because somebody had asked in the room a while back if I could teach some really simple high probability trading strategies that even beginners or novices could follow easily and be able to take high quality trades off of. So I showed them a strategy that I like. I like it for scalps and day trades primarily, but it works for anything. Okay, so if you want to swing trade, you just go up to the higher time frames, and instead of the 10, 20, and 30, you would use the 20, 40, and 60. Or if you really want, you know, like a long-term trade, like you're going to be in it for weeks and weeks, you can go 50, 100, 150. Okay, so I haven't really come up with a name for this, but I'm just kind of calling it either the EMA 3 or the equal moving averages trend trading strategy. But let's look again. So here was the opening candle on the overnight session. What were we doing at the time? At the time, the trend was up, right? Okay, price right here got above the 10 and above all the moving averages. The 10 was above the 20 was above the 30. Okay, this could have been a scalping opportunity, okay, on ES. Okay, so you enter when the high of this candle gets taken out. So let's just say approximately 32.29. And then the rules say, if you're just following the rules to the letter, it's when you get the first close below, right? And that would have been right here at 37.50. So that would have been a $8.50 gain. But you can manage your trade as well, right? Okay, you could manage your trade. You could get up here, and you see the difference. This came up and it pulled back. So we came up into this level of structure. So you would expect we should get a little bit of resistance. It pulled back, and where did it pull back to? Right to the 10. It did not close below, and in fact, it bounced off of it and went higher. So what did we do? We made a higher high, higher low, higher high. Now, what's the difference here compared to here? Okay, this was a pullback. I see we just had a bunch more people join us, so welcome everyone. We had a pullback here. Here we sort of based, right? We went sideways. Okay, so what you maybe could have done is drawn a line right under here. I'll show you, because this is probably how I would have traded it. All right, there we go. You see that line right there? And then if price starts to break down below that, you just enter. And you're going to catch a couple extra bucks. You know, that's it. Or you just wait, as the strategy says. You wait until you get a close below the 10 right here. And that would have been good for $8.50 from the break here to the close there. And if you would have exited, let's say, up here when this broke down below, it would have maybe given you an extra $3. Right, so instead of 8.5, you would have made 11.5, which is still significant, right? Because every dollar is worth $50 if you're playing a standard contract. So $3 extra is what? An extra $150. Okay, so let me get this off of here. Remove. All right. So again, looking at the overnight action, we were above, trend was up. Momentum was up as well. How do you know? Well, we use our RSI indicator down here. Whoops, sorry about that. Let me get the trend line tool. And I do see this candle over here, but again, we're inside the opening range. All right, so down here again, how did we know momentum was up? You simply take your trend line. Okay, you see that there? All right, so when we're here, even on this pullback, what you're watching for is two things. Is it going to break below the 10? And is momentum going to break below the trend line to the upside? Okay, the answer was no in both accounts. So there's really no reason to get out here. And look what it did. Okay, trend was up. All we were doing was pulling back. You see we had this nice candle here, resting candle. We went higher. We got up into this level of structure. So we anticipate we're going to get a little bit of resistance. Where are we likely to pull back to? To the 10, right? That's where it pulled back to. We get our bounce. We go higher. We make a higher high. We base. Then it drops back down below the 10. Okay, then it breaks back down below the 10. Now you want to remember this area right here for future. Okay, and why would you want to remember it for the future? Because that's going to be a likely area of resistance in the future. If you want, you could go ahead and draw it in right now. And that way, if price ever comes back up there, you'll be looking for resistance right in this area here, right across the bottoms of these candles. Just a little bit. There we go. Okay, so you'll be looking for resistance right through there. All right. I'm going to take this one off because it's been tested and broken to the upside and the downside. Okay, you see what I mean? It came up here, it got resistance, but then it broke through, and on the way back down, it came down, it kind of hung out in there for a while, and then broke down below. So that's why I'm removing that level right there. Okay, so this would be an area we would be looking for if price started to ramp to the upside. We would look for this area the first time it comes back to possibly be resistance. Hope that makes sense to everybody. Okay, right now we're seeing a fairly strong candle here. Okay, it hasn't broken out of the top yet. In fact, it hasn't got, as of now, it hasn't broke above and held above all three moving averages yet. Okay, but we have our alert set, so if it does, we'll come back to it. Let's pull up TrendSpider. Okay, so what I have on here right now is the 30-minute. This is the 30-minute chart, and I'm going to go down to like the 1 and maybe some smaller time frames to show you how you can micro scalp. All that means is you're just trying to take much smaller chunks out of the market. All right, so last night, one of the people in my room, one of our members, had asked my thoughts on what I thought about USD JPY. Look over here, USD JPY. So it's the dollar yen. And at the time, okay, we were right over in here. This is where price was, and you can see it looked like it might be trending down a little bit, but was it really? Okay, was it really? So here we had a nice trend down, and how do we know? Besides the fact that it was moving to the downside, okay, here's our three equal moving averages, our 10, our 20, and our 30. And when I say equal, it just means they're equally spaced apart. Okay, 10 plus 10 is 20, plus 10 is 30. They're equally spaced apart. Okay, was the trend down? Yes. Were the moving averages widening? Yes. Okay, was momentum down? Look right here. Okay, yes, right? It was down. All right, so for here, you were definitely looking at shorts. We came down, we pulled back to the 10, okay, came down, pulled back to the 10, came down, and then finally broke through the 10, right? So this could have been a trade when you took this candle out. Let me see if I can move that over a little bit so you can see it. And I might have to pull this down just a little bit. There we go. All right, see this candle here? Okay, and then this candle, once it broke below, all you have to do is start asking those questions again. Was the trend down? Yes. Was the 10 below the 20 below the 30? Yes, right? Okay, so were they widening? Yes. This candle here, when it gets taken out, that could have been an entry for a short. Okay, that could have been an entry for a short. Another thing, what was volume doing? Volume was up. Remember our black line right here, that is our 50 period moving average for volume. Okay, so what we're trying to do is find situations where all these factors line up and they make it a high probability trade. So when volume is increased, right, that means volatility is also probably increasing. And look what happened. Look at the move we got to the downside. Okay, bounced here off of the 10, nothing to do. Bounced here off of the 10, nothing to do. Bounced off of the 10, nothing to do. Then it finally, right here is where it closed above the 10. So you could have took this as an exit, right? Or if you have some other way, just a target, and we're going to talk about that here in just a second. If you just have a target, hey, if I make 3 to 1, I'm out, period, right? If that's your rule, then that's your rule. Okay, but let's see what we would have got here. Okay, that's 91.8, and right here is 41. So let me just double check again. Yep, it was 91.8, so let's just say 92 to make the math easy. And then down here where we closed above, okay, was 41. 41 minus 92 is 51, right? That's a 51 pip move to the downside. 51 pips. All right, so that was a short trade. Now let's get back over to where my member was asking my thoughts on what was happening when the price was right in here. Okay, right in here. I told him, well, I told the whole room that what I anticipated, okay, what I could see, and I'm going to show you, I'm going to walk you right through this. Okay, we had this strong move to the downside, and then what did price start to do? Okay, basically started to range right through here. Let me do this. I'm just going to draw this so you can see it. Okay, sort of right through there. I'm going to make it a different color. Okay, see this? Okay, now it did kind of poke its head out right there. All right, but basically all this price action was just chopping back and forth. You see how the moving averages had flattened out. They had come together. And then look down here at our RSI momentum indicator. We, again, use it for momentum. We were making, over a period of time, we were making lower highs and higher lows. See this? Okay, so even the momentum was squeezing together. We were making lower highs and higher lows. So when he asked me, when price was over right about in here was when the question was posed. I said in the room, okay, it looks like we may be headed for a momentum squeeze. And all that means is, again, you see how momentum was bigger. And what do we mean by bigger momentum? Wider swings, right? Wider swings on the momentum. And then it starts getting smaller and smaller. And then eventually it's going to pop one direction or the other. So I said we were looking for a momentum squeeze, and shortly after that, here's what we had. Boom, a big pop. Okay, that was about 30 pips. That was about 30 pips on this one pop when it popped above our momentum squeeze here. See this? When it popped above, it gave us a 30 pip move. Now, did we know where it was likely to go? Absolutely, right? We knew that this would be a likely area of resistance. How come? Right? We were moving strong to the downside. This was a pullback, right? And then we went lower, pullback, went lower. So this pullback here becomes a level of structure, and we would know that that would be a likely area, okay, to see some resistance. And then what happened? We got what's known as a bounce, retest, and go. So there's a break. A break is when you break through a level, retest, and then go higher. That's a continuation pattern. A bounce, retest, and go is a reversal pattern. So see, just follow me here. We came up, we bounced, came up again, retested. We're retesting this level, and then go. So this is a bounce, retest, and go pattern. And we dropped here nicely. Good morning, 4 Points Trader. Nice to have you. He is a new member in our room, and I'm glad you are here on the YouTube live stream as well. Okay, so this is what we were looking for out of a momentum squeeze. Once it finally broke out, okay, you get this big pop. Okay, look at that. This is 30-minute chart. So 1, 2, 3, 4. In less than 2 hours, you had a 30-point move to the upside. You would have had a nice area to have a take profit target. So maybe you only get 25 pips, right? Maybe your target would have been in here somewhere. You get 25 pips. Now you just let price play out, right? Because you're not really looking for too many trades when everything's going sideways. Then you get the bounce, the retest, and now when it starts to go back below, right? Look what's happening with the moving averages. The 10 and the 20 are crossing below. Now this is not a crossover strategy, but the probabilities is if price is below the 10 and it's below the 20 and it's below the 30, you have a high probability that price is going to go down. Look what happened. Down, right? Where did it bounce? Right around here. It got just a little bit below, right around this pivot point. Okay, I already had it marked. I had it marked before price ever got there. You see it just barely got below and then boom, big bounce. And now it's still trying to go lower, right? So maybe we're starting or continuing this bigger downtrend, right? Down, bounce, bounce, bounce. Then we ranged. We tried to go higher, could not get through this structure level, came around. Okay, bounce, retest, go. Then we bounced, and now we're putting in a lower low again. All right, that's how you read price action. Yeah, absolutely. If you're in a trade, you can share. Yes, 4 Points Trader, absolutely. Let us know what you're in. Okay, we could even take a look at it if you'd like. All right, and again, welcome to everybody who's here today. We've got another nice group. Make sure you smash that like button, give us those thumbs up, subscribe to the channel if you haven't already, and definitely turn on your notifications bell. And check us out in the room once this is over. Go to simpletradinglife.com and click on the free chat room button, and you can come hang out with us in our chat room. Everything is 100% free, all the content. So yeah, if you let us know what trade you're in, we can even take a look at that. Now, what I really wanted to cover today, while we have a little bit of time, is micro scalping. And it's just what it sounds like. You're just taking smaller scalps. Typically, that's going to happen on the 1, the 2, or the 3-minute time frames. Okay, now yesterday I think I looked at the 1 because somebody asked. Let's just look at the 2 today. And we're just going to pick something at random. It doesn't matter. Let's go to the most popular currency pair in the world, which is the euro versus the dollar. Okay, it's the euro versus the dollar. Now, when we are micro scalping, the rules are still the same. Okay, we want to know, are we in a trend? Okay, we haven't been, right? I could draw this in. Let me draw this in for you. I'm going to show you how I go through and analyze everything if I was taking trades myself. Okay, does that look like we're in a trend? No, right? All we're doing is chopping back and forth until when? Now, right? Now, look at this. The 10 is below the 20, which is below the 30. They're starting to widen. Okay, for me, right? For me, an entry probably would have been on the break of this line, right? Because that had been support. And look what's happening. Look how quickly price is falling. You guys are watching. This is real time. Okay, look right here. real time. We're live. This is real time. So for me, if I was looking for a micro scalp, it would have been on the break of this because of what I can see here. 10 below the 20, 20 below the 30. They're starting to widen. Okay, we look down here. Volume has been above average, so that's another factor we put in our favor. Also look over here, because then we want to look for a likely, right? A likely take profit target. Okay, so for me, I would be looking, and again, this is not going to be exact. I'm just trying to give you a general area. I would be looking to get down into here. Let me mark this for you. Make it green. All right, so I would be looking to get down to here. Our entry was right here when we broke below here, which was, let me look at that again, 1724. Okay, 1724. And then if we got down to here, well, here's the easy way to do it. Let me find it. When I say easy and then I don't get the right one. Okay, here we go. Just take your ruler. 1724. Okay, down to the top of here is 19 pips. All right, 19 pips. Get rid of this. Okay, so that would be 19 pips. Now, where would your stop go if you entered right here? Okay, you could do it a couple of different ways. Some people are going to go back on top of this next candle. Some people are going to go on the other side of these moving averages. Some people are just going to have a certain risk tolerance, right? And maybe they're going to say, my stop is 5 pips and I'm looking to make 15. All right. 4 points trader, I will check that out in just a second. Give me just a second here. Let me get through this. All right, so some people do that, right? They'll go from here. So we already know that the entry was 1724. So your stop would be 1729. Let's find that on here. Right there. Okay, which is really the top of that candle. Okay, so that's a 5 pip stop would be the top of that candle. And then you're looking to make 3 to 1. So your take profit target would be, I'll draw it for you. Guys, look how it's playing out. Okay, we're just watching this in real time. And all we're doing is putting the probabilities in our favor. Whoop, I hit the wrong one. Sorry, guys. I got to get the ruler because I just want to get there. Oh, we've already hit it. Right there. Okay, if I leave that, right at the bottom of this was 15 pips. So if you're somebody who is really, really into rules, which is great, and you want a 3 to 1 on each one of your trades, a 3 to 1, I just showed you how you would have done that, and you would have already hit. You see that? You would have already hit. And we're getting a little bit of a bounce. How about that? But you come back up here. Your entry was at 1724. We're going to walk through this again. Right there. Okay? So basically, you're breaking this line. Your stop, this is if you're using just a straight 3 to 1. Right? You're not really caring about being above the moving averages or whatever. You come up 5 pips if that's your risk tolerance, which just happened to be at the top of this. So that would have been 1729. And then you take 15 pips from your entry, okay, which is the very bottom of this point here, and you exit, right? You just go ahead and set it. Set and forget. Here's your stop. Here is your take profit target. Boom, you already would have had 15 pips in 1, 2, 3, 4 minutes. 4 minutes, and if you're playing a standard lot, right, depending on which pair you're on, it's going to average around $10 a pip. Okay, what's 15 pips? $150 in 4 minutes. Right? Some of them pay more. Some of them will pay, $12.50. Some of them will pay a little bit less. It just depends on the currency pair you're trading. But on average, it's about $10 a pip. So 1, 2, 3, 4 minute micro scalp, 15 pips, boom. And how did we determine it? We just determined it in real time, right? Right while you guys are watching. We knew we were in a range, right? But what happened? Boom, we bounced off the top. We had this strong momentum to the downside. Okay, market was shifting. Well, you could even look back here. See how it's already trending down? Volume was above average. Price was below the trend. The 10 was below the 20 was below the 30. They were starting to widen. Everything was in our favor. We had an entry, right? We're looking right across here. Okay, this had been our support level. So that's our entry. If this breaks, boom, 5 pip stop, 15 pip target. It's that easy. It's that easy. Okay, this is what you call micro scalping. How many times a day can you do this? As much as you want, right? I'm just going to tell you that a lot of the people that I know that micro scalp, they're typically looking for 50 pips a day, right? So there's 15. Now they got 35 more to go. And you're not going to win every trade, right? You're going to lose some, but if you're at a 3-to-1, which is what I usually shoot for, okay, and you're going to look and know, does this trade give me 3-to-1? Okay, based on what we could see, it was pretty easy that we could get 3-to-1. All right, now you could also just be looking for this target. Okay, so down here, what did we say? This was 19 pips. So if it made it all the way down to here, you'd make 19 pips. That's another way of doing it, right? You pick out a target based on the candle structure. Then another way of doing it is you simply stay in the trade as long as price is below the 10. So if the 10 keeps coming down and price is below it, you just stay in the trade and you keep trailing your stop. So let's just say you started with a 5-stop pip. Once it moved maybe 10 pips, then you move it slightly into profitability. Okay, then if it gets down to 20 pips, maybe you move it from here to 10 pips. And then if it gets down to 30 pips, so on and so forth, you keep trailing it down. And if you get to a point where you want to exit, you just take your exit, or you wait until price comes back and closes above the 10. Okay, so that's a simple way of doing it. All right. How much dollar value is a pip? That depends on what you enter at. Okay, so a standard lot on forex, on average, each pair can be different, but on average it's about $10 a pip, and that is the 4th decimal point on most, and on your JPY, your yen pairs, it's the 2nd decimal point. That's your pip. So every time that moves 1, right, that's going to give you approximately, if you have a standard lot, $10. But the great thing about forex, you can play as much or basically as little as you want. So you can play mini lots, all right, mini lots, and you can play micro lots. So you can go way, 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 way down. You can go down to where you're getting like $1 a pip instead of $10 a pip, or you can go way up. Say currency trading is the most popular trading in the world by far. Okay, and I know, there's a whole bunch of people in here right now. Those of you who trade forex, you already know what I'm talking about. But on average, the currency market trades about over 5 trillion with a T dollars per day. If you take all the other markets in the world, including the New York Stock Exchange, NASDAQ, the American Stock Exchange, the commodities, if you take everything else in the world and combine it, it's not even a blip compared to the currency market. And the currency market trades 24 hours a day because somewhere around the world, there's an exchange open. So you have your Australian, you have your Asian, you have your Japanese market, and then you have the Europe market, and then obviously you have the US market. All right, so let me see here. Hang on, guys. I had to silence a call. It's just a solicitation call. I get the same number all the time. As soon as it goes off, I saw another comment pop up, so give me 1 second. Because we're going to cover a lot more here. All right, 4 Points Trader. He says he is short ES at 32.2250, 5 point stop, looking to take 8 points of profit. Okay, and he's moving his stop. So let's go back over. We're going to come back to TrendSpider here in a second. All right, so he entered. He said he was short at 32.2250. 32.2250. All right, that would be way down here. That would be way down here. So you entered, are you saying you entered down here and then you were going, you said a 5 point stop. That'd be way up here. And you were looking for an 8 point profit. All right, so based on what, if I'm reading your own rules correctly, you've probably already been stopped out. Is that correct? Or are you still in the trade? Hey, Akawande, good to see you, bud. Yeah, so Akawande brings up a good point. If you're newer or you're struggling with your trading, or if you have a small account, Forex is an awesome place for you to be. There's no PDT rule, pattern day trading rule, okay? You can trade as much as you want every day. No limitations, only your account. Your account's your only limitation. Okay, so if you want to take 2 trades a day or you want to take 20 trades a day, there's no pattern day trading rule. And you have this awesome range that you can trade from really, really small to really, really big, right? The biggest traders in the world trade Forex. I'm talking about like whales, individual. I'm not talking just about institutions. Institutions are always bigger. But like the biggest individual traders in the world, they trade in Forex because they don't have to worry about liquidity. No matter how much money they have, right? There's so much liquidity in Forex that they never have to worry about their fills. So some of these guys who trade millions and millions of dollars per trade, they're in Forex. They're trading in Forex. And you do not have to. I lost my train of thought. I was trying to look there. You don't have to worry about options. So with options, you have premium burn, right? And you're trying to worry about your delta and your theta and all those kind of things. And time is against you, right? Time's against you in options. So if you don't get quick moves, right? That's when premium burns, and sometimes the market can actually go in your direction, but if it goes slowly, you don't really make any money, right? Or if you get a big move to the upside, your profit goes up really big, but if you don't exit right away and it comes down about half of the way that it just went up, like all your profit disappears, right? So those are some of the limitations or the cons of trading options. In Forex, you don't have to worry about any of that. Okay. Is that Al? AL or Al, I don't know which one it is, but he's saying, what's a good starter account size for Forex? It's totally up to you. Most Forex brokers, I believe, will let you start an account for a couple $100, $250 or so, right? So somebody could start an account like really, really small. You know, what is the best amount to start it with? I don't know if there's a best amount, but I know a lot of people out there, a lot of trading gurus will say that you should, you know, even if you're going to be a beginning novice trader, you should probably start with somewhere between 2,500 to 5,000. That's up to you. I mean, I don't know what you have, and I don't know if that fits in, but you can open an account for like literally a couple $100 and take those really small trades. And then you build your account up slowly, but it's not as slow as you think, right? It's not as slow as you think. Akawande says I've convinced him. All right, 4 Points Trader also just now added another to the short at 32.24. Okay, and then Scott, can you do a beginner setup for forex starting with the right brokerage for less than 5,000? And can I use TOS? Okay, lots of questions there. So yes, you can use TOS. I used to use TOS for forex years ago. I don't really like TOS for forex, but that's just me. System is always glitchy. Their spreads aren't as tight. I would recommend Awanda. That's how I pronounce it. I think some people might call it Ananda or whatever, but Awanda, O-A-N-D-A. Okay, a lot of professional forex traders I know, that's the brokerage they use. That's the one that I use. They seem to have super consistent tight spreads. Okay, so spread is obviously the difference between the buy and the sell price. Let's see here. Okay, buy and the sell. Buy and the sell right there. You see how it's just barely over 1 pip. All right, so that is the spread. So that's basically the commission you're paying. When you enter a forex trade, most brokers don't charge commission. They're making their money off the spreads, but some do. And for a commission, they're giving you supposedly extra services. You don't need to pay commissions on forex. So on the spreads, there are some forex brokers that their spreads are crazy. So like their normal spread is going to be like 3 or 4 pips, and then when volatility increases. So when volatility increases on forex, sometimes the spread increases, even on any platform, right? But let's just say, I'm just giving you an example. Let's just say Awanda is typically around a 1 to 1.5 pip spread, right in there. Okay, if it gets really, really volatile, they may go up to 2 or 3 pips or whatever. Their spread is going to get a little bit bigger. Some of these other brokers that don't have as consistent or tight of spreads, like I'm not exaggerating. There's somebody in my room, like he put it and he actually took the screenshots. The broker he was on, it got super volatile on a Friday near the end of the day. The spread went to 25 pips on one of the pairs that he was trading. And he lost a bunch of money. That's crazy. That's crazy. And I told him, man, get away from there. Get away from there. And then another thing is like when some reputable brokers were at 2 or 3 pips, that other one was like 8 or 9 pip spread. So when you enter the trade, why is that important? If you enter the trade and the spread is 8 or 9 pips, that means you're 8 or 9 pips in the hole to begin the trade. So now not only does it have to move 8 or 9 pips, that's just to get to break even. Now you're just now going into profitability. Or the inverse, if it starts to go against you, your losses will pile up quickly. So here, like when we were giving this trade, it was only a 1 pip spread. So if your stop is at 5 and you enter here, you're only 1 pip, okay, to the negative. 1. That's it. As soon as you move 1 pip, you're break even, and then anything after that, you're making money. Right? So some people actually factor the spread into their take profit target. So let's say you're going for a 3 to 1, right? So 5 pip stop and you're going for 15 and you have a 1 pip spread. Well, then maybe they shoot for 16 and that covers that 1 pip spread. You don't have to do it that way, right? It's just more math in your head. Okay? So hopefully that kind of answers those questions. But I would look at somebody like Awanda, O-A-N-D-A, right, for Forex. Okay, very reputable. And I know some very, very, very professional, when I say very, very professional, very big time professional Forex traders, and they all pretty much use it, okay, for their Forex trading. If there was ever, I keep saying this, if you want to talk about a billion-dollar idea, if there was ever a broker who could have one platform, one account, and had equities, futures, and forex all in the same place, and you're all coming out of one account, and the spreads were good, and on equities you didn't have commissions, and on futures your fees were low, they would be awesome. There's only one or two out there that currently have it all, but they're horrible. And when I say they're horrible, I'm using my opinion. Like Interactive Brokers, they have the availability for everything, but it's not easy, and like some of the fees aren't great, and I tried them for a very short time. I didn't like them. And one of my friends, he is a professional futures and forex trader, that's all he trades, he doesn't trade equities, he tried them at one time and he said the same thing, total disaster. So he has one account that he trades futures, he has one account that he actually trades futures options in. Okay, it's a different broker. He likes their options for futures. So he has one for futures, one for futures options, and then he uses Oanda for forex. So anyway, okay, let's go back. All right, so we just looked here. We just looked here at a successful micro scalp. Let's just look at a different name, right? So let's go back up here. This is the Aussie yen. Okay, and I haven't looked at any of these. We're looking at them in real time. So let's see where we're at. Let's do our analysis. First thing, okay, this is the 2 minute. We're on the 2 minute chart. Okay, we looked at 1 minute yesterday. Overall trend is what? Overall trend is down. Okay, so we can see that. And you can go to other time frames. So people who micro scalp, meaning they trade primarily on the 1, the 2, or the 3, they'll use like the 5 and the 15 as their wider frame of reference. Just like when I'm normally trading, I trade on the 30 minute. I use the monthly, the weekly, the daily, and the hourly as my bigger picture, right? But I'm trading on the 30 minute. So people trading on the 1, the 2, or the 3, they're typically looking at the 5 and the 15 for a bigger picture because they never plan on being in a trade more than, a few minutes to maybe 15 to 20 minutes at most, right? They just don't plan on being in the trades that long. All right, so we know, again, overall trend is down. Okay, let's get a little bit more current. Okay, the current trend is down. Price is currently pulling back into the moving averages, right? Okay, where would we have liked to try to get a scalp? Right up here, right? Right up here. That would have been a good scalp. Right there. That would have been a good scalp. Okay, but where are we at currently? We're trying to determine, are we interested in a scalp right now? Well, first of all, everything's moving sideways. That's an X, right? We're either going to put check marks or X's. Okay, right now it's moving sideways. That's an X. Overall trend is down. All right, so that's a check mark. All right, meaning if we're going to go short. But as you can see, right as we're talking, it's starting to even go up higher. Okay, where's the volume? Okay, well, it's below the 50 period average. So the last 50 candles, volume is actually low. Okay, that's an X, right? Is price above or below the moving averages? It's above. That's an X. Already, this is not a trade we're interested in. That's how easy it is. So we move right on to the next thing. We're going to go through and we'll take these and I'll show you how easy it is to analyze these. And we already took the trade that we just took for a 15 pip winner in a matter of minutes doing the same analysis. All right. So now we are on the Aussie Kiwi, which is the Australian dollar versus the New Zealand dollar. Let's look at the bigger picture, okay? I want you guys thinking through these things with me as we go through here. Is our trend up, down, or sideways? Currently, it's sideways, right? Okay, so if we drew a line across here, and we drew a line across here, price is just chopping back and forth between it. But on the shorter, right, on the shorter view, it's to the upside. Okay, it's just important to know all of this. Is price above the moving averages? Yes. Okay, is the 10 above the 20 and above the 30? Yes, check it off. Volume, for the most part, volume is below average. That's an X. Where are we at in a move? Well, we're actually pretty extended to the upside already, right? See this? Okay, see when the 10 and 20 got above the 30, which would have been right in here. Here would have been a decent place to look for a trade. The only thing I wouldn't have liked, and if one factor out of 4 or 5 or 6 is not in your favor, but everything else is, that's fine, right? It's very rare that you're going to have all of them. If you have all of them, that's awesome. That increases your probabilities. All right, but where you could have looked for an entry would have been right here. All right, and you'd actually still be in the trade. There would be no reason unless you just had a set target. Let me do this. I'll move it down just a little bit. So unless you had a set target, like I'm exiting when I get 3 to 1, or I'm exiting when I get, whatever, or you might have had a level of structure or something like that. All right, you'd still be in this trade. So let's look. The entry would have been around 0.7, let's just say 0.740. It'll make the math easy. 0.740. Let's grab our ruler. Come over here. Where's 40? Right there. Whoop, right there is 40. And let's go up to where we're at currently. All right, that's about 9 pips. A little over 9 pips is where we're at currently. Everybody see that in the box? Okay, your 4th decimal point here. So already that would have been, okay, that would have been 9 pips, and you're still going unless you had a target. Now let me come back down here. Give me a second. Take that off of there. All right, where would your stop go? Okay, because this is going to help you determine other things. Okay, you could maybe go right below here, and that's about a 3 pip stop. Or you could go below the moving averages, and that would be about a 4 pip stop. So to achieve 3 to 1, right, you would either need 9 pips, which we've already hit, or you would need 12 pips, right? If it's a 4 pip stop, times 3 would be 12 pips. So if you were going for that, hang on one second, come back down here, let me get to 40. Well, I got to get the ruler first. All right, let me get to 40. Right there it is. All right, so then let's find 12. Right there. Okay, so the top of this would be 12 pips. So if you were going for a 3 to 1 on a 4 pip stop, you're looking to get up here. If you were going right below this candle, that was a 3 pip stop, you've already hit it. You've already hit your 9 pips. So again, if you want to be ultra conservative and very, very regimented, you can just do that over and over and over again. All right, I'm just using simple math. One lot, $10 per pip, you would have made 90. You would have risked 90. You risked 30 to make 90, and you're out. Okay, we made 150 on our first trade that we looked at, that one in real time. So now you got 9 more pips, so now you've made 240, right? Now, where we were at in real time, what I was saying was the move has already been a fairly extended move, so you only want to enter on what? On pullbacks. What just happened right as I was saying that? A pullback right to where? The 10. Look at that. Can't make it up. Look at that. Right to the 10, and then it bounced. Okay, so you can take a pullback and then try to take a trade, but you got to understand, again, we're on the 2 minute here, right? So every candle is 2 minutes. You've got to understand the move may start to be extended. Let's look here. Let's see if there's is there anything else we need to worry about? Let's move sideways. No, I don't see anything like anytime close. Let's put this back over. Got a really good group today, so I'm glad everybody's here. I hope everybody's having fun and learning something. Okay, here we go. We're taking just a little bit bigger picture. See that? Look at that pullback. Right to the 10. Right to the 10. Why do you think we have the 10, the 20, and the 30 on here? You don't have to use these. I know people that use a similar strategy, and they'll use like the 9, the 18, and the 27. As long as they're equally spaced apart. I know others that'll use the 8, the 16, and the 24. I know some people, and I was going to talk about that, we can change these and see how it changes things. I know some people that use the 5, the 10, and the 15. Right? I just happen to like, for me, I think that the consistency's there, the 10, the 20, and the 30. This is for scalping and day trading. All right, let's see here. Okay, Al is saying, sorry if I missed it, but can you explain why that would have been the entry? Okay, now Al, if you're talking about this one, here, the entry would have been because the 10, we have a bunch of factors. That's what I was going through. Okay, trend is up. Check. Is price above the trend? Yes. Check. Two things in our favor. Is the 10 above the 20 and the 20 above the 30? Okay, we're looking for an entry right there. Yes. Check. Three things in our favor. Are the EMAs widening? Okay, meaning see how they're close together through here? Now what are they doing? They're starting to widen. Are they widening? Yes. Check. Four things in our favor. Come down here, okay? Volume at the time. This is the only one we're going to have an X on. I like to enter most of the time when we have above average volume. This black line, all this is a relative volume scale. You can set this line to anything you want. I like 50. 50 moving, the 50 moving average of the last 50 periods. So if you're on the 2-minute, it's the last 50 2-minute candles. If you're on a daily chart, it's the last 50 days. But when volume is above that line, your relative volume is above average. When you're below it, you're below average, okay, compared to the last 50 candles. So the only thing, we were right up to it here. This is where our entry would have been. You see we were right at the line. I would have preferred it to be above. So that one's an X. But everything else, right? Everything else was a check mark. So that's why we would have been looking to enter when we take that candle out right there. Okay, I hope that explains it. That's what we're trying to do right now is show you how you micro scalp. Now remember, this over here, that is 12 pips from this entry. Okay, that was 12 pips. If you're placing your stop just underneath this candle, which a lot of people do, that was only 3 pips. So if you were going for 3 to 1, 9 pips was right up in here, you already hit it. You would already be out of the trade. If you were going below, placing your stop below these moving averages, you would have been at 4 pips. 3 to 1 would have been 12. You wouldn't have hit it, and you would have got out of the trade here, right? Because you had a candle that went back below the 10. Okay, so let's just say you exited like right there. You would have only made about 6 pips, but you still would have made money, right? Still would have made money. Would have been a positive trade. You still want to manage your trades. Okay, see how it's falling now. See how it's falling. So now we're getting back into these moving averages. Look at momentum. Oh, that was another thing. Momentum at the time. Let's do it so I can show you. So we actually would have had 5 out of 6 factors in our favor. Momentum at the time that we would have entered was to the upside. So that's another one. Check. So that's 5 out of 6. 5 out of 6 factors were in our favor, and that's why the trade worked so well. These are micro scalps. I want everybody to understand who's watching. Okay? 4 Points Trader is now long 32.29. Let's go back and just take a real quick look at that, and then All right, where was 32.29? That's up here. Okay, lost. Okay, lost. All right, he's out of trade. He's out of the trade, and that happens, right? So you just have to respect. You have to respect your rules, your stops. Now, 4 Points Trader. I don't know if you were on at the beginning. What I was saying is I'm not interested in anything unless we break out of here or I get some kind of really confirmed signal. So we're on the 30-minute here. I'm going to go back to the micro scalps, everybody, so just hang with me. I'm on the 30-minute, right? Every candle's 30 minutes. But look at the chop. Look at this. And the opening candle, big whipsaw. This one, big up. This one, big down. Back up. This one, big down. Okay, all it's doing is chopping. That is so hard to trade. I'm personally not interested. And also, look here. Look at the moving averages. Look how price is all tangled up in them. Think about it common sense. If price is all tangled up in the moving averages, we're not interested. Where are we interested? Over here, right? Okay, they're widening. The trend is up. Momentum is up. Price is above. Okay, I don't have relative volume on this chart here, but I'm sure relative volume was probably up. Okay, over here, this was a high probability trade. Very high probability. Okay, above the moving averages, price above the moving averages, momentum to the upside, like everything was in our favor. So over here, this is a great trade. Now, we don't want any of this garbage. See this? This is garbage. Okay, and I'm saying that, I'm using my own vernacular here. Okay, and we get over here, and price is just whipsawing back and forth, and it's all tangled up in these moving averages. We want to see a strong break this way above, or a strong break this way below. All right, that's for everybody. That's for everybody. I'm not just talking to 4 Points Trader. Okay, so let's go back over. Okay, let's move on to the next one. The Aussie dollar, Australian dollar versus the US dollar. So the first thing we're going to do is do what? Again, we're looking at micro scalps on the 2-minute today. Okay, we're going to go back out. Okay, we're going back out. And where is the trend? Okay, for the most part, it's to the upside, but it's very choppy. It's very choppy, okay? That's the wider view. Now let's come back in a little bit closer. Current price. Are we above or below the moving averages? No. That's an X, right? Okay, is trend moving up or down? No. That's an X, okay? It's moving to the side, right? Look at how all the moving averages are moving sideways. Momentum up or down, okay, it's currently down, but on the longer picture, okay, on the longer picture, it's to the upside, but currently it's been down, all right? So that's kind of in between. Look at volume. Volume, do we have above average volume? No, we don't. That's an X. All right, we've already got 3 X's, 3 strikes and you're out. So we just move on, right? Let's not get involved in any garbage trades. Okay, euro pound, euro pound. You guys are going to see how this works. We're going to do it over and over again. What is the longer overall trend? Just on the 2-minute, right? Because these are micro scalps. We're only going to be in them for a few minutes at a time. Overall trend is down. Okay, that's just information. So now let's look at more current. Let me do this. Move it up just a little bit. Okay, so where are we at currently? Is price below the trend? Yes, check mark. Is the 10 below the 20 and below the 30? Yes, check mark. Is relative volume above average? No. X, right? We got below average volume, right? So that's an X. What's momentum doing? Nothing. Okay, pay attention. I want you to see this because a lot of people miss this. All right, let's just come back kind of like this. And come back here. Same place. Well, I don't know why it did. Oh, I have to click it again. I'm still getting familiar with what you have to do on this platform. There we go. Okay. Momentum is doing nothing, right? Even though we're coming down, look at momentum. See how it's just chopping along in here? Now it is down. It's below the 40 on the RSI. And again, we use RSI for momentum. We could care less about overbought or oversold because this is a classic example. People who try to use it as overbought and oversold, look how long it's been oversold, right? Anything below this blue area is supposed to be oversold. Look at how long it's been down here, right? It's been down here a long, long time. But here's what we want to look at. Is it trending up? Is it trending down? No, it's going sideways. Another X. So we already have two X's. How long have we been in the trend? Quite a while. Quite a while. That's kind of an X, or at least sort of a neutral, right? Because if we are in a longer term trend to the downside, we have to be careful that at some point price could go into consolidation or it could reverse, right? I don't think we saw any place where it was likely, give me 1 second, likely to reverse, but I want to double check. Nope, I don't see anything anytime soon. All right, so come back over here. So really already, I don't know that I would be thrilled to jump into anything here because our volume, see our volume is below. We really have 2.5 X's already. So I would just move on, right? You don't force anything. Now, this is the difference between elite traders or way above average traders, maybe not elite, but above average traders and pretty much everybody else. Everybody else might look at this and they'd say, oh my gosh, we're in a downtrend. Price is below, I'm going short. All right, but they're not looking at the whole picture. And the whole picture is really not that, that great in your favor. Okay, so the above average trader says, no thank you, boom, they move on. Right? They're looking for the best trades. So far, as we've been going through this analysis, and you can see how quickly you can do it, we've only taken, in theory, we've only taken 2 trades. 2 winners, 2 very highly probable trades, and like 4 other pairs, we've just moved on. We do our analysis and we move on. Yes, 4 points trader, I'm using the 10 EMA, the 20 EMA, and the 30 EMA. 100%, you got it. All right, so here we are. Now we're on the Euro Yen. We're on the Euro Yen. We scroll out. What is the overall trend on the wider picture? It's to the downside. That's informational. Okay, we really don't care. That's not a check or an X. Okay, where are we at in the near term? It's also to the downside, but flattening. Okay, but flattening. And if it helps you, you do this. Okay, if this helps you, do something like this. Move that down. Okay, that helps you to know, all right, see how it's starting to flatten? See how the moving averages are coming together? All right, so that part of it's an X, okay, because we're not currently trending down at the exact moment. What about is price above or below the trend? It just now went above. It just now went above, but we're not really trending up yet. We're not going to give it an X or a check. What about relative volume? It's low. See this? We're below average, so that's an X. So we already have 2 X's. Where are we trending? Now here, this is nice. This is interesting. Let me show this to you. This signals to you that you could be seeing a trend change about to occur. Okay, what is trend doing? Look at this. Even though it was dropping here, look at momentum. Momentum was already starting to go up. It was already starting to go up even when we flattened out and based right here. Okay, so that could be telling us that a shift is about to come. Now that doesn't necessarily mean we're ready for a trade at this particular second, but this may be one that you watch for a few candles. right? Do we start to get, okay, price above trend? If we get that, check. Does the 10 and the 20 cross back up above and get on top of the 30? If they do, check, right? So now we'd have 2, then trend would be moving up, check. We would watch volume. Does volume get above average? If it does, check. Okay, we already know momentum is going up, check. All right, so this would be one that you could watch for, right? You could watch this, or maybe you set an alert, or whatever, or you go look at something else, you come back in a few minutes and you see where you're at. But obviously, this was sort of a hint that momentum was starting to change, okay? It was changing from this. If visuals help you, use visuals. Sorry about that. I thought I had the tool. There we go. Okay, I want to show you. I'll draw it all the way through because it'll be a better visual. So momentum was changing from this to this. You see that change? You see that right there? Okay. So now this would be one, again, to keep your eye on. You're not ready for a high probability trade yet. Again, here is where people get into trouble. They're going to look at just one thing and say, okay, I'm long. I'm going long. It'd be the wrong time to do it. The probabilities aren't in your favor yet. They're getting there, but they're not yet. All right, so what is this? Euro, yen? We'll come back. We already were on Euro USD. Let's go to pound yen. Okay, here we are in pound yen. Okay, what's the first thing we do? We're going to look at the bigger picture. Okay, look at this lovely double bottom that we had. Look at this. See this? Boom. Once you take these out, okay, once you took this level out, you're very likely to get back to the origin of the move, which looks like it was about right there. And look, it got right to it, touched it. See this here? Again, I'll draw a visual for you. The origin of the move was right there. Got to come up just a bit. Whoop. There we go. I'm going to change this. When it's above, I like it to be pink. Okay, there was the origin of the move. When you get these double bottoms, 1, 2, here's your double bottom. Once you break above the top of the V, now this was sort of kind of created a W there. Once you're above here, you're highly likely, it's not 100%, but you're highly likely to get all the way back up to the origin of the move. Look at that, right up to it. The stuff, you got to know this stuff. You got to learn this stuff. These are simple, basic things. You start filing them away. So if you get into the trade in here, let me scroll back out. Let's see where we would have had. All right, so we know that was the double bottom. It comes back up. Let's look for the first point where this and this are above. It would be about right here. Okay, and that's that candle. So you wouldn't look for an entry until you take that candle out, because we're looking for the highest probability trades. Okay, so you could have had it. Now remember, you're not going to see any of this other stuff. Let me get it over here. You're not going to know any of that right now. Okay, right here is where it's about to break above. So you're looking for an entry right there. So right around, let's just say 135.5 to make it easy. Now let's start moving it on. Okay, boom. Where did it go up to? It went up to 135.65. So it went up 15 pips just like that. So are you a 3-to-1 trader? If you were a 3-to-1 trader, actually, excuse me, it went up 10 pips. It went up 10 pips because you're taking You're taking this candle out right there. This one right here. Its high was 5.4. So it went up over 11 pips. But where would your stop be? Well, if you went just below the candle you entered on, it's only going to be a couple pip stop. You're probably going to want your stop a little bit more than that. Maybe you come down here to the bottom. All right, that might be a little wide, but that would be about a 5 pip stop. Yeah, about a 5 pip stop. So if you're looking at 3 to 1, you're looking at 15. Now you might not have got there, right? How do we know? Let's use our ruler. Entry was at 5.4. Okay, now let's go back. Scroll it out. Okay, almost. You didn't quite get there. You didn't quite get there. Because the top of this, right at the point, that's 15. So if we come down, I'm trying to see. So what is that, 69? 67. You got 13 pips, right? So if you got up there, you didn't quite get there, and it starts to come back, okay, are you going to pull out? That's up to you, right? If you start seeing a big wick like this, I'd probably just take some profit and get out, right? It got up to 13, didn't quite make it to 15, and you want to manage your trade and get out with some profit, all right? Let's come back over here. So now this is what you call a J hook, right? This is what you call a J hook. Why? It looks like a J, right? It looks like a J. Where would we be looking to enter? Right here, okay? Price pulled back. We talk about pullbacks, right? We're trending up. We pull back. Now it pulled back below the 10, but it caught, supported, and got slingshotted right here off of the 20. When you get back above the 10 and you take out the top of this wick is above the 10, there is your entry. Okay, so your entry would have been at, let's just make the math easy, 135.56. Okay, your stop would have probably went right here, just below this candle, which also would have put you below the moving averages. That's 135.51. And our entry was 56, so that's a 5 pip stop. And we're going to look for 3 to 1. Let me find it. Five, 6. Just bear with me, folks. There it is, 5.6. Now we're looking for 15 pips. Oh, easy, easy. Oh my gosh. Right there. Right there's 3 to 1. Easily hit it. You actually went on, you could have, right? But if you're only looking for 3 to 1, right there's where you would have exited. Let's see what you could have got if you were just trailing it up to that next area of resistance. You could have got 23 pips, right? When you first touch this next area of resistance, right there, which was also the origin of this move, okay, that would have been 23 pips. You see that? So the first one here, you would have got the 13 pips and then it started to pull back. You were trying to get 3 to 1. That's if you were trying to get 3 to 1. So you wouldn't have quite made it. Maybe as it pulls back, maybe you just stop out around 10 pips, 8 pips, whatever. Still a winner. The second trade, whoops, sorry about that. I don't know why it all of a sudden decided to do that on me. There we go. I'm trying to stretch it out so you can see it better. The second trade, which would have been an entry right here, look at it, above average volume, trend is up, check, check, price is above the 10, check. They're widening, the EMAs are widening, check. Momentum is up, check, 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 check. Okay, you see all the checks. That makes this such a high probability trade, and look what it did. If you were just going for 3 to 1, you hit it easily right here at the top of this. Right there was your 15. We had a 5 pip stop, 3 to 1, that's 15. You exit right there and you're just done and you're looking for your next one. Or if you were looking to try to get to this target, you made that easy. Okay, it probably went another 2 or 3 pips past that. That was 23 pips. Super, super, super easy. Okay. What would need to happen for it to become a good long entry? Okay, Al, which one are you talking about? Which one would it, are you asking what would it have to do to be a good long entry? You tell me which currency pair and I'll tell you. Are you talking about the one we're looking at now, which is pound yen? Okay, for it to be a good... Okay, no worries, no worries. But let me, here, I'll just talk about it right here. Okay, for this to end up being a good long entry where we're at currently, we would need to see price bounce back up above the 10. We would want to see volume all of a sudden spike up and become above average volume. We want to know that momentum is still to the upside. Okay, now right now it looks like, here, let me draw it in. Draw these in if it helps you. Okay, I can look at these and visually know, okay, here's where we were. Okay, that's where we were up until right here. And now look how it's starting to fall below. Okay, so that would concern me a little bit, right? But it could always turn around. It could always turn around, get a bounce down in here, and start back up. But I would want to see volume get above here. I would want to see momentum turn around and start back up. We want price above the 10. We want these to continue to trend upwards and widen or stay about equal. If they're already wide, you want them to stay about equal then. Okay, here is where they're actually widening, but then you notice like through here, they're all pretty much staying the same. As long as they stay the same, that's good too. Okay, so those are the kind of things you would look for a long entry. For a short entry, well, obviously we got to get price down below here. We'd have to get the 10 and the 20 below the 30. We'd want to see volume above average, and then we'd want to see momentum trending down. Okay, so hopefully that helps you guys out. We'll go through a couple more and then we're going to wrap this up. All right, so let's go to pound dollar, also known as the cable. All right, so what do? We look at the wider range. It's obviously been trending up. Okay, been trending up. Now let's look at more current. Okay, where are we at in the more current scheme of things? Well, right now we're tangled up, right? We're tangled up in the moving averages. So that's a big X, right? Is there any kind of trend at the current moment? No, right? Because these are going sideways. That's a big X. So we already have 2 strikes. Well, here's going to be our third one already. Look at volume. Low volume. There's strike 3. Don't even look at anything else. You move on. Okay, New Zealand yen. This is the Kiwi yen. Yes, 4 points trader. I will absolutely cover that, and I'll cover that right here. Give me 1 second. Okay, so here we are, the Kiwi yen. Let's look at the bigger picture. Okay, on the bigger picture, we've been trending down, and now we're starting to kind of chop and range. Remember, if it helps you, do this. And if you get outliers, that's okay. Okay, see how the majority of this price is right in through here? That's an outlier, and this is sort of an outlier. Okay, that tells you that you've been ranging. Now let's go to more current price. Okay, are we above or below the trend? No, we're not. X. Momentum, is it up or down? Okay, it has been up, but it looks like it's crossing below, so we want to be careful. Okay, it has been to the upside, but now it's starting to cross below, so we want to be careful. All right, so that's kind of in between. We'll call that neutral. Okay, the 10 is above, but price isn't above. Right, so price isn't above the trend. Volume, okay, here's another X. Boom, volume is low. I would just move on from this one. Okay, we're really at like 2.5 X's right now, so I would move on. New Zealand dollar. This is going to be the last one, and then I'm going to look at the RSI, show everybody what we do with the RSI. Okay, what are we at on the bigger picture? Oh, look at this. Chopping sideways, chopping sideways. So you just got to remember that. Got to remember that. Look at this. I would draw this in immediately. Come right here. Okay, see this? You could even do it this way. This would probably be better. Drawing a rectangle right here. Like so. Why is it not doing it? There we go. So sort of like that, right? Because why? It's obviously a resistance area. See how price keeps coming back, and every time it hits it, what's it do? Boom, shoots away, shoots away, shoots away. So if we get back up here, we'd want to be super, super careful, right? Okay, but now let's look. Are we trending up currently? Yes, we are. Is price above? Yes, it is. That's an X. Is the 10 above the 20 and above the 30? Yes, it is. Excuse me, a check. So there's another check. Is momentum up? Well, currently it's sort of chopping sideways. Overall, it's up. Overall, it's up. Let's give that a minus. All right. Volume? No. Volume is low. That's an X. Are we close to an obstacle? That's something we haven't really been talking about because we haven't been near one yet. Yes, we are. That's an X, right? Because we don't know how it's going to react right here. Look, it's getting up here right now. We'll watch it just for a minute or so. These are only 2-minute candles. We know what it's done in the past. See this? So we would want to be ultra conservative here. That's an X. All right, so, and we came down here and we said this one was sort of a minus. Right, like kind of neutral. It's been kind of up, but look at in the recent, right here, it's just been ranging. Okay, we don't like that. We want to see it steadily moving up if we're looking for a long. Now, there's nothing to say that we can't break right through here, but all we're doing is looking what has happened in the recent past. Right? This level has been respected, and obviously in the recent past, sellers have just been sitting there and then they just drive price down. And look what's happening. Look at this. As soon as we get there, we got sellers coming in. All right, so let me, would you trade from one end of the chop to the other? Okay, now, that's a totally different strategy. Not on this strategy. Okay, this is the equal moving averages, or I call it the EMA 3. That's lack of a better name. This is a strategy that is a trend-based strategy. Okay, there are strategies absolutely that when you're in a range, and if you've identified it and you know where price is typically respecting it, I'm just making something up here. Let's do this. Just give me a second here. All right, just ignore this right now down here. Let's just say that price just keeps going like this. All right, could you trade those back and forth? Absolutely, but that's a totally different strategy, right? That's not the one that we're talking about today. That's a range trading strategy. And they can be nice, right? If this move is giving you enough, let's see what it gives us. Just for kicks. There we go. Just for kicks. 10 pips. All right, so that's 10 pips. So if you are happy, right? If you're happy with a 10 pip move, I'm going to get rid of that. If you're happy with 10 pips back and forth, which you may be, right? Because up here, what is your risk going to be? Your risk is going to be about 3 or 4 pips. All right, so if it's 3, then you're at least getting your 3 to 1. If it's 4, you're not quite, but you're still getting almost 3 to 1. Okay, same thing down here. Okay, so it'd be 10 back up, 10 this way, 10 back up. Anyway, if you're good with that, yeah, but that's just a different strategy, and we'll cover those kind of strategies later. Based on what I just learned from you, I am long 6 micro Euro USDs. 3 will be out at 1743, and the other 3 at 1751. Okay, awesome, 4 Points Trader. Let's here. We'll just go over there, and that's where I will talk about the. That's where I'm going to talk about the RSI momentum indicator. All right, now let's see. You say you're long at 17363. 17363. Am I reading that correctly? So you're wanting to go long if it gets up here? Is that what you're saying? Am I on the right thing? Euro USD. I am long. Are you saying if it gets up here? I'm trying to gauge because that's way up here. Okay, here's current price. Micro. I'm sorry. You're on the micro. Gotcha. All right. Well, anyway, let's just talk about the setup for the RSI momentum indicator. So that's down here. Let me make it bigger so everybody can see. All right, so what we're doing is the normal settings for RSI are 70-30. It's 14, 70, 30. That's the standard default setting. What we do, and this was given to me by a professional futures and forex trading friend of mine. He's been using this for about 10 years. He does not trade off of it. He uses it just as a factor in whether he likes trades or doesn't like trades. And he trades kind of completely different than what we trade. He's mostly a supply and demand trader, mostly. And then he uses stuff like this to confirm whether he wants to take a trade or what's likely to happen. So we modify it to 60-40. That's this blue area. If price is just hanging out in here, we would say it's neutral. Right? If it's like right here, it's neutral. Now, obviously, the momentum is up. See this? The momentum is up, but we would say it's in a neutral range. When price is below 40, we say momentum is strong to the downside. So if you're coming up on a, give me 1 second here. If you're coming up on a, I'm just going to make something up if you bear with me. Let's just use this right here. All right, let's just say you're calling this a supply area. Okay, just bear with me. And you're coming up into here. If the momentum is trending up and it's above 60, we would say that it's likely that you're not going to get much of a bounce out of there, and it might even be likely that you're going to break on through the level because the momentum is so strong. We're not using this as overbought and oversold. Vice versa, if this, and again, I'm just making this up because this is obviously not a demand area right here. But if you're saying that this is a demand area down here, change this, and price was coming down, and when it gets here, it's trending down, okay, like this, trending down, and it's below the 40, we would say that momentum is strong to the downside, and it's very likely that you would just get a little bounce, and then it's going to test again, or that it may even break through. Okay, we use this indicator as a momentum indicator. We don't care about oversold or overbought. If I'm going to use something for that, which I don't typically do anyway, I would probably use a different indicator. RSI, used in its normal, by the rules fashion, is highly erratic. Okay, and I know some of you haven't been on here the whole time. Earlier in the live stream, I showed where I think it was one of the currency pairs, had been in what would be considered oversold territory for a long time. We're just hanging out down there, right? Just hanging out down there. It can stay, quote unquote, oversold or overbought for a long time. It is not a reliable indicator for that. I know that's what they designed it for, but it's a much better momentum indicator than it is for oversold or overbought. So that's why we use it the way we do. All right, so anybody else who might have had that same question about that, hopefully that answers it. All right, so does anybody have any other questions? We'll take one more look at ES before we get out of here. Okay, so ES, look at this, breaking out of the top. Okay, breaking out of the top. If we can get through this area here, let's draw a rectangle so everybody can see it. Kind of right in there. Okay, so if it can break through there, then you would look at this wick. This would be an obstacle. We also have a resistance level here at 3238.50. But if it could get through here, you got a wick here and a wick here, your next area would be this rally base drop area right there. Right there. That would be your next area. And that begins at around 32.42. So that's on ES, right? Okay, you see it's starting to catch a little bit of resistance already right here in this level of structure. See how we dropped? We based and we dropped again. Okay, see how it's catching some resistance right there? So if it helps you, like I usually, if I'm trading by myself, I can just see this, right? But if it helps you, draw them on your screens. Visuals are great. I love visuals, right? But after a while, you just start to be able to see them with your eye, right? So I would know that this is probably going to be important right through here. This is going to be important right up here. And you always have to watch bigger wicks. You always have to watch those as obstacles. 4 points trader. Yes, you just leave the steading at 14. At 14. That is correct on the RSI indicator. See them down here? 14, 60, 40. 14, 60, 40. All right. Well, it's been a great session. We've actually been on here a lot longer than I planned on staying today, but that's great because we covered a lot of good stuff. Hopefully, everybody who was on here learned something about micro scalping today that you can put into practice. You can micro scalp forex 24 hours a day. 24 hours a day. Right? So if you guys, members in my room, live halfway around the world, they're in a totally different time zone. Right? So when we're sleeping, they're awake. They can be micro scalping forex. But even if you live in the United States, right? No matter when you're awake, you can micro scalp it. And I showed you, we can go over it again in other sessions, but I just go down the list. And that's how easy it is. You just look at one, you run through those 5 or 6 factors, If you can put 4 or 5 or 6 of them in your favor, then it's probably a decent trade to take. If you put them all in your favor, it should be a really good trade to take. But if you get 3 X's, 3 strikes, you're out. 3 strikes, you're out. It's as simple as that. You just stop. If you get the 3 X's right away, just move right on. Do not force anything. You don't have to. You don't have to force any trades. I see too many traders that they get a bias or they have an opinion on something or they think something should happen. And when you start thinking too much, that's when bad things happen. Let the price action dictate, let your rules dictate what you're supposed to do. If you would just follow your rules, whatever they are, like I was using 3 to 1 today, if that's how you're going to trade, use it every time. Okay, don't start a trade and say, okay, this is going to be a 3 to 1 trade. As soon as I hit 3, I'm out. Or if I hit 1 to the downside, I'm out. Okay, don't start that way and then start changing your trade. Well, I'm going to move my stop. Okay, I know I said 3 to 1. I know I said 5 pips. It's almost to 5 pips. I'm going to move it to 8. I'm going to move it to 10. Right? Whatever. Or vice versa. You see it start going up in a hurry. You know what? I was going to get out at 3 to 1, which is 15 pips, but man, it's starting to really come up. I'm going to move it up to 20. I'm going to move it up to 30, whatever the case may be, and then price never gets there and reverses and drops, and now you don't make anything. So however you're going to trade that strategy every time. Follow your rules every single trade. I put that in the room all the time, and I capitalize it. Every single trade. Follow your rules. And if you'll do that, if you have a good trading psychology where you don't get emotional, right? Because it's just the rules. I'm just following the rules. You're going to win, 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 lose. Win, 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 lose, right? Maybe you lose 2 or 3 in a row, but if you lose 2 or 3 in a row, you're probably going to win 6 in a row. It's all going to average out and you're going to come out ahead. And here's the funny thing. I showed my room. If you're not in my community, go to simpletradinglife.com, click on that free chat room button, come join us. Over the weekend, I put in this long post about like how you have to set goals and you have to take that next step, but the key is following your rules. You could be a 50% trader at 2 to 1, and if you followed your rules to the letter at 50%, 2 to 1, depending, I think we used a $2,500 starting account. Okay, to the letter, and we're at 50%, you could make $1.5 million in like a year. And you know why hardly anybody ever does that? Because nobody follows the rules every time. It's human nature. It's human nature. You start deviating, you start adjusting, you want more. Fear and greed, right? Fear is worse. That's the worst emotion. But fear and greed causes you to start changing your rules, and the second you start changing your rules, you're doomed. You're doomed. Okay? I know, I'm trying to think of the guy's name. There's a guy now, he's been trading for a long, long time. He's a forex guy. He made his first $1 million trading forex his very first year trading. Why? He watched other people trading. This was, 25 years ago. He watched other people trading. He figured out which strategies seemed to work the best. He just took a few of them and he followed the rules on every single trade, and he only traded a few strategies because he knew they had a high probability of playing out. And if I remember right, I believe he took 2 to 1. I think, but don't hold me to that part of it. But he made his first $1 million trading in his very first year, and he's like, I just did it because I just followed the rules. To me, there was no other way to do it. Okay, here's my strategies. Let's just say he had 3. I don't know how many for sure. It was just a few. But if I'm taking a trend trading strategy, let's say it's my EMA 3 here. If I'm trading this strategy, I'm going to follow the rules every single time. If my take profit, if my risk to reward is 2 to 1, I'm taking profit at 2 every time, or if it goes against me, I'm stopping out at 1 every time. And if you do that, and you're only 50%, right? You're going to make money, and it's going to compound very quickly. It compounds way faster than you think. But humans, what do? We think we know better. And our mind is giving us bad information. Oh, you can make a little bit more. Trust me, you can make a little bit more. Hang on. And all of a sudden it goes against you and you lose money. Right? Or you get greedy. You're making your risk to reward way too big. Or you're making your stops way too big. That's another thing. I see a lot of gurus out there that talk about having these huge stops. Let the trade play out. Well, when you have these huge stops, what's going to happen when you get stopped out? You're going to lose big. You want small losses. Very, very small. Okay. Steve. Hey, buddy. Steve's also in our room. Thank you very much for the kind words. Okay, I'm going to go ahead and wrap this up, folks. Remember, give us a thumbs up. So smash that like button. Subscribe. Turn on your notifications bell. You'll always know when we go live. We've been going live in the mornings a lot more often, and probably going to do that for the foreseeable future. And join us in the chat room. Go to simpletradinglife.com, click on the free chat room button, come and hang out with us. All kinds of content. There's lessons in there, there's videos, we have our main chat, we have people who trade everything, futures, forex, and equities. Okay, I primarily trade futures and forex, a little bit of equities, but we have other people in there that trade almost exclusively equities. We trade options, we trade standard contracts, we trade shit, we trade it all. We trade it all. And it's all free. No strings attached. It's not like once you get there, hey, we're going to get you to join this over here. No, it's all free. 100% free. So we'd love to have you. Thank you so much for joining me today. We'll see you in the room. Bye-bye.